What's up, guys? It's Stan from Coin Bureau Trading. Today, we're going to talk about why the crypto market is likely to rally a bit over the next couple of days before experiencing a pullback. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, just keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So when it comes to why the crypto market is likely to rally in the next couple of days, guys, that has simply to do with the fact that going into Fed meetings, the crypto market tends to get a little bit of a rally. And then as you can see in this image, hopefully, I know it's a little bit tricky to see, but when the Fed meeting actually happens, then we tend to see a pullback after that Fed meeting. And of course, as you might have heard, there's going to be a Fed meeting this Wednesday, which means that we're likely to see the crypto market rally a bit today and tomorrow. And then on Wednesday is likely when we're going to start to see some volatility, specifically a pullback. And this is even more likely when you consider, guys, that a CME gap has formed over the weekend. The CME gap level is somewhere around 89,500. I think it's like 89,525, something like that. And the main thing to keep in mind, guys, with these CME gaps is that, one, they do not need to be filled right away. So there is space for there to be a rally for the next couple of days before the CME gap gets filled. And the second thing to keep in mind is that you need to see prices fall to basically to the CME gap price on the actual CME exchange. So for example, if we see Bitcoin's price fall to 89,525 or whatever on Binance, that doesn't count as the gap being filled. It needs to fall down to 8,525, whatever, on the actual CME exchange. So you need to be watching this chart specifically and not paying too much attention to what's happening on exchanges. So again, long story short, going into Fed meeting, looks like we're going to get a little bit of a rally. After Fed meeting, we have a history of there being quite a significant pullback, let's say around 5% in Bitcoin. And then after that, actually, we tend to see a continuation to new all-time highs, but, we'll take things one step at a time here. But again, this pullback after the Fed meeting seems very likely because there is a CME gap here for Bitcoin. There are also CME gaps for Ethereum and for Solana. With that being said, we can turn over into the charts. And what I do expect here in the short term is for Bitcoin probably to rally back up to around 94K. That seems to be another key resistance level, let's say. So rally up to 94K, then probably another drop back down to the Bollinger Band moving average on the daily, which by that stage will probably be somewhere around 89,525 or whatever it is. And then for Ethereum, also expecting here a little bit more of a rally, maybe up to like something like 3,300, maybe something around that level before a pullback, again, probably retesting the Bollinger Band moving average on the daily. What's really interesting, guys, is that if you look at the ETH BTC chart, you can see that ETH BTC is arguably breaking out. And what we've seen over the last couple of days is actually pretty remarkable. So last week we saw a break above this level, which I pointed out, like basically ETH BTC has been struggling to get above this level now for months. It finally got above that level last week. And then yesterday, it was interesting as it saw a kind of sudden sharp drop. You guys might remember that there was this really random like little sell off of like long liquidations where basically Bitcoin fell to like 87K or something, and Ethereum fell to whatever it was here, fell to 2,900. So there was a little bit of like a mini flash crash, and during that mini flash crash, we saw ETH BTC retest this long-term resistance level, which is what you want to see from a technical perspective. When you get above a key level, you want to see a retest of that level before continuation higher, and that's exactly what we saw over the last 24 hours, which is very fascinating. And what that basically means is that ETH BTC is likely to continue rising here, and the reason why that's important, guys, is because, of course, when it comes to altcoin season and altcoin rotation, it starts with Bitcoin, it goes into Ethereum, then it goes into large caps, and then it goes to the rest of the crypto market. It's pretty crazy to think that, to argue that basically since the spring, you could say, this is when we finally started to see higher lows in ETH BTC, basically saying that since the spring, this is when we finally started to see rotation from Bitcoin into Ethereum. And we're kind of in this, in terms of the stages of the crypto cycle, we are now kind of like in the Ethereum stage, you could argue, which is hard to wrap your head around, of course, because Ethereum's price in fiat terms hasn't been doing that well. But if you're speaking just purely in relation to Bitcoin, you can see that, yes, there actually have been higher lows ever since the spring in ETH BTC. And that suggests that it has been, over the last few months, slowly gaining ground against Bitcoin. And I do think this is a trend that is going to continue. The last thing that I'm going to mention, of course, the most important macro indicator in my view to watch is the US dollar. I'm going to explain this in every single video, or at least every video where I cover the DXY, is that when the US dollar, or like the US dollar index, which is the DXY, when the DXY goes down, that means that global liquidity is high and rising. And And when the DXY goes up, that means that global liquidity is falling and being drained. And likely to go lower rather. So what you want to see, of course, is for the DXY to fall. And the more that the DXY falls, the more that crypto will rally, all else being equal. The correlation is not perfect on short-term timeframes, but what was interesting is I think late last week we saw a spike in the DXY, and then of course we did see kind of like a sharp drop in crypto, and everyone was wondering what was going on. And it's a really interesting topic. Basically, there was like some rumblings around like the EU potentially like banning like Russian oil exports, which is like how would you even enforce that? But anyways, the main thing to watch for the DXY this week is to watch a drop for the US dollar index down to around 98.5 or 98.6 roughly, which is the Bollinger Band moving average on the weekly. This, in my view, is kind of like a very, very critical level to watch in terms of, you could say that macro liquidity cycle, whatever. The US dollar needs to break below this level for there to be a continuation in the crypto bull market and for there to be an altcoin season, basically. If we do see the US dollar index continuing to rally higher here, like if it hits this level and then in the next couple of weeks starts rising again, that would be very bad. And that would basically be confirmation that the cycle is over from a macro perspective. And as I've explained before, guys, if we look historically, when there's a first leg lower in the DXY, that corresponds to a crypto rally led by Bitcoin. Then we have like 2 to 3 months of chop in the DXY. Then we get a continuation lower, like a second leg lower in the DXY. And that's where we get altcoin season. And what's been quote unquote different about this cycle is that historically this period of chop lasted maybe like 3 months, maybe 4 months max. We're now approaching whatever it is, like 6 months here. So like something like 5 or 6 months, which is absolutely crazy, where we've been waiting for this chop in this chop zone. And it's been really frustrating because the more that the DXY, when the DXY is basically at the upper level of this range, then the crypto market is struggling. When it's at the lower level of this range, then the crypto market is rallying. But it's basically just been bouncing in this range here now for like whatever it is, 6 months, which is just crazy, unprecedented. And yes, that is the thing that is quote unquote different from a macro perspective. And again, key takeaway being we need to see a break lower below the Bollinger Band moving average on the weekly for the DXY, and we need to see a drop here. We need to see that second leg lower to get that altcoin season, which you might say, oh, it keeps getting delayed, it keeps getting pushed out. Well, yeah, it's because I've basically just been watching the US dollar here, and every single time, in June it looked like it was going to break down and get that second leg lower. In September it looked like it was going to break down and get that second leg lower, and then of course we've seen this nasty grind higher in October and November in the DXY, which is precisely why the crypto market was hit so hard, in my opinion, like from a macro perspective. But now you can see that since the start of December, we've started to see the DXY gradually falling below this key resistance level, or key support level rather. So things are looking good for in terms of macro liquidity, and hopefully this trend continues. And what I'm hoping is that the Fed meeting in the next couple of days will cause the DXY here to really drop. You can see it's almost forming like a bear flag pattern here. So to see a nice big drop in the DXY, that's what we want to see here in the next couple of days. And if you guys are planning on trading crypto, then do check out the links in the description, especially the first one, the top one here, BitGet up to 50,000 USDT deposit bonus. When you click that link, it'll take you to a page that looks like this, and you guys might notice that yes, the Coin Bureau does have a partnership with BitGet, but on a personal note, I think that BitGet is an awesome exchange, and it's one that I would definitely recommend. That does not mean that you should be keeping your crypto on BitGet. You should always keep your crypto in your personal wallet. But with that being said, it's completely free to sign up for BitGet, and they have everything you could need. They have spot trading, they have futures, they have tokenized stocks, they have on-chain trading, they have trading bots, they have a whole bunch of different features. And again, it's completely free to sign up. So just, take a second, sign up, see if they have something that's right for you. And if they do, then with enough trading volume, you will be getting this 50,000 USDT deposit bonus. So again, check that out. Link is down in the description. And if you made it this far and you did find that information helpful, guys, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.